In 2008, the United States fell into a foreclosure crisis where millions and millions of homeowners faced the loss of their homes through foreclosure processes all over the United States. I was practicing law at that time, and in 2008, although there were some protections for homeowners and some federal loan modification programs, those programs really did very little to help people save their homes. Very few people actually got loan modifications and were able to pull themselves out of foreclosure processes. Now, that might not be a bad thing because a lot of these homes were so underwater that a loan modification really wouldn't have helped with that. But the people who were interested in keeping their homes and were successful in getting loan modifications were able to do so. However, the majority of the people who could not get loan modifications lost their homes and had to start all over. At that time, I remember that we had a special court in Miami specifically for foreclosures where homeowners and lawyers would wait hours in line to try to get a judge to stop a foreclosure sale because there was a loan modification in process or some other form of trying to save the home. It was a mess. Thousands and thousands of people would go to these foreclosure dockets, and there were crying homeowners and frustrated judges and frustrated lawyers, and the whole process honestly did not work. Now, we're in 2021 and we're looking at a new crisis. The question is, what's going to happen with all these new forbearances and all the people who are not paying in their homes? Are they going to go into foreclosure, or is something different going to happen in 2008? Now, I'm going to talk a little bit about my real estate predictions for the next couple years. Now, my predictions come from what I'm seeing right now on the ground, from reading what the federal government is going to try to do, and also comparing it to what happened in 2008 and the years after, and how those differences look like a completely different situation than what we're dealing with right now. Now, the most important thing to realize about home ownership is that all homeowners are real estate investors. It doesn't matter if you bought your home 20 years ago and you're just paying it off to have a place to live when you retire, or if you're looking to buy multiple properties. Everyone who bought a home is a real estate investor. Everybody who owns a home is interested in what's going to happen with the real estate market, because this is the primary investment for most people, and this is the thing that most people are using to build their equity so that when they retire, they're able to have a nice retirement. It is very important to anybody who owns a home what's going to happen with the real estate market and what will happen into the future. What's the government going to do with all these forbearances? Because all these forbearances and the millions of people who are in them, those situations right now are having great effects on the real estate market that a lot of real estate professionals are seeing, and a lot of real estate investors and homeowners are also seeing. My name is Diego Mendez. I'm a loan modification, foreclosure, and bankruptcy lawyer here in Miami, Florida. Like I said, I've been doing this type of law for about 13 years now, and I've seen a lot of different situations. And I'm going to talk about in this episode of Debt Law, Survival Guide for the Desperate Debtor, on what I think is going to happen in the next couple of years and what people can expect from the real estate market in the next few months into 2021, 2022, and beyond. As I explained, in 2008, it was a complete mess. Thousands and thousands of people here in the Miami, South Florida area were served with foreclosure papers almost instantaneously. It was a mad rush to the courthouse to try to stop these foreclosures, delay them, to give people a chance to figure out what they were going to do with their primary investment. I remember going to court and sitting there alongside desperate homeowners and frustrated lawyers, everyone with the same goal of trying to stop the banks from foreclosing on people's homes. It was a very sad situation. A lot of people got very upset and burned from buying real estate and then losing the real estate in foreclosures. Obviously, that had effects on people's credit and the morale to buy new properties. But as time went on, the real estate market healed itself, and these poor folks that lost their homes also healed themselves. And a lot of people were able to buy new homes after the financial crisis and move on with their lives. COVID hit in March of 2020, and a lot of people went into forbearances in hopes of not having the same thing happen to them that happened to people in 2008. These forbearances at the time were something that people thought they were just going to do for a couple months to see what would happen. And a lot of people are still in them a year and a few months later, and they have the opportunity to stay there for another 6 months or beyond and into September of 2021. Now, what is the big difference between 2008 and 2021? The biggest, most important thing that's completely different from those two time periods is the existence of a little known federal bureau, which is called the Consumer Financial Protection Bureau. This bureau was created after the crash of 2008, specifically to deal with the situation that we're in right now. So it shouldn't be a surprise that this bureau is actually acting on behalf of the federal government to try to limit foreclosures. This is an extremely powerful federal government entity that's exercising its muscle right now in delaying foreclosures and setting up rules and audits for mortgage companies to make sure that they follow the rules. This is a very big difference in 2008. In 2008, this did not exist. It was almost a voluntary honor system with the banks, which we know we can't trust the banks, but this system backfired, I think, in a lot of ways, because the banks did not do what they were supposed to do, even though they were giving billions and billions of dollars to bail out the American homeowner. A lot of these banks did not do anything for them and really just put people in a worse situation than they were before. But this organization, this entity, the Consumer Financial Protection Bureau, is actually out there right now and is doing a lot of different things, which I've talked about in other videos right here, which were looking to limit foreclosures into 2022. Now, the other big difference between the time period of 2008 and 2021, beyond the existence of the Consumer Financial Protection Bureau, is that at the time, in 2008, there were no forbearances. People could not choose to go into forbearance. It was either pay, loan modification, or foreclosure. Those were the choices, and short sale. But in order to keep your home, you had to get a loan modification. Loan modifications were extremely difficult. They're very difficult to get even now, but they were an option for some folks. And some people were able to get loan modification. I'm not saying nobody got them, but most people did not get them. So the people that were able to get them were able to keep their homes, but the people who were not able to get loan modifications lost it. In 2021, we have forbearances. That did not exist at that time. You could not ask for forbearance from your bank in 2008. Forbearances were only really limited to natural disasters like hurricanes and that sort of thing, but you could not get a forbearance for a financial situation like what happened in 2008. 2021, completely different. 2021, there's a lot of forbearances and people are in that situation. Almost 3 million homeowners right now are in some form of forbearance. Again, there was no Consumer Protection Bureau at the time, Financial Protection Bureau, which is something that I've talked about in other episodes and I talked about a little while ago. The other thing is that in today's real estate market, because there are forbearances and delays in foreclosures, there has not been a huge price drop in the values of the homes. And actually, the opposite has happened. Because there are fewer homes for sale, the prices have actually gone up. So the incentives for foreclosure are less for the banks because the homes actually have equity, and a lot of people have been able to refinance and get themselves out of their problem. But that is one of the big differences between 2008 and 2021. Now, the other big thing is because in 2008 there were a lot of foreclosures, there was a huge inventory of homes that flushed into the market, and people were able to pick up these homes for dirt cheap and rebuild their lives in that way. However, in 2021, there's almost a movement to zero inventory in the real estate market. Now, a lot of my real estate professional friends, real estate agents, mortgage brokers, real estate brokers, those folks are suffering right now not because people don't want to buy homes, is that there are no homes to buy. Because there are no foreclosures and there's no incentive to sell and there's no properties to buy, then there's fewer homes to sell. Therefore, it's a vicious cycle where a lot of people who are in the real estate market are going to start feeling that pinch very soon if they haven't already. The last thing is, I don't remember politics playing much of a role in 2008. Even though politics are always floating around, in our new political age in 2021, politics seem to be playing a role, and I'll explain that in a second what I mean by that. I'm not trying to get political on this show. I'm not looking for any side one way or the other. I'm making an observation as to what I see going on and what I think is going to happen. So, the predictions that I have, and the first one is something that I just mentioned, which is politics. Now, the Consumer Protection Financial Bureau Consumer Financial Protection Bureau is a federal entity, but it's also part of the federal government, which right now is controlled by Democrats. I think that there will be a delay in foreclosures until after the 2022 midterm elections. I don't see this bureau allowing a flood of new foreclosures to hit the market right before an important Senate and House and governor election in 2022. I believe that even if people are still unable to get loan modifications after the proposed ban on foreclosures into 2021, I think that ban is going to continue until after the November elections. That's my prediction. It's just from what I've seen, and it seems like we keep moving things down the road, and there's no reason why the government would all of a sudden allow a surge and an explosion of foreclosures right before an important midterm. That's what I see. I think that's a good thing because it keeps people in their homes. But it's just, if you're looking to buy cheap properties, or you're looking to get into that business, I'm not sure that 2022 is going to be the right time to try to do that. Now, the next thing is that there's going to be more and more forbearances and more loan modifications. Right now, the Consumer Financial Protection Bureau is looking into a rule change that's basically going to force banks to make every possible attempt to give folks who are in a COVID-related delinquency or forbearance, and extended forbearances and loan modifications. Obviously, if they do this, there's going to be fewer and fewer people losing their homes to foreclosure, which means, again, there's going to be fewer and fewer homes on the market, and prices are going to keep going up. So that's the other big prediction that I have, which I don't think is that much of a prediction other than, just looking at what's really going on in the world. Now, because there are going to be fewer and fewer properties on the market because of the foreclosures are going to be delayed, the property values are going to keep going up. Fewer for sale properties means the properties that do go for sale are going to keep going up in value. There's bidding wars on every single property that goes out there. I do some of this work through short sales and other things for my clients, and what I'm seeing is that every time one of these properties goes onto the market, even properties that most people wouldn't normally want because of their location or the state of the property, people are making multiple bids on these properties because there's nothing else to bid on. There are very few properties right now here in South Florida, and the people that do put their properties up for sale are seeing even higher prices every time that they put their properties up. I predict that this is what's going to be into the future, all of 2021 and 2022. Doesn't mean there's going to be a lot of properties for sale. It just means that the few properties that do go for sale are going to keep going up and up in value. Now, unfortunately, another prediction that I have is that, again, there were a lot of people who, when COVID hit, they were just living their lives, and there were people who were in delinquencies and they were defaulted for other reasons unrelated to COVID. These folks are going to be shut out of a lot of the COVID-related protections that the Consumer Financial Protection Bureau has out there. These things, even though the protections are extremely broad, they do have a limit. And it seems like judges and other people who are making these decisions are going to limit the protections to people who actually can trace it back to COVID. So if you were in a delinquency situation that was started in 2019, it's probably going to be very difficult for you to get any protections that these entities are putting out there right now. So I predict no mercy for these folks. If you have a delinquency from before COVID, it's going to be very hard for you to get loan modifications, that sort of thing, because the banks, those are the only properties that the banks can actually foreclose on and turn around and make money on. So I would suspect that the banks are going to be laser focused on these cases, and I've already actually seen this in my practice, that a lot of these old cases that were put into limbo during COVID, during the lockdown, the shutdown of 2020, are being breathed back into life, and the banks are being extremely aggressive with these old cases. It's becoming very difficult to delay the sale of older cases before COVID, and these properties are selling basically in foreclosure, and the banks aren't working with folks. So I see that this is going to be the place where the banks are going to focus. They're going to focus their energy on properties that they can sell, which are properties from before COVID, and they're going to put a lot of focus on this and force these people out of their homes, unfortunately. Now, so bottom line, people ask, and I see a lot of YouTube videos and other commentary about this foreclosure wave that's coming, foreclosure wave. I don't believe there's a foreclosure wave. I believe that there will be a foreclosure trickle. I do believe that some of the folks who are in the forbearances right now will eventually lose their homes, because in the end, these forbearances keep growing month after month after month. And I've done videos like this one about that and how it eats up your equity. And it basically at some point doesn't become feasible to keep the home, because if you're in a forbearance for 24 months, sometimes that means that you owe $100,000 in a lump sum that they're going to put at the end of the mortgage, but that eats up all the equity. The house is now underwater, so it almost doesn't make sense to keep the house. A lot of those folks are going to dump the house, are going to get out of that situation either through a short sales or letting the house go in a foreclosure. But in terms of a forced foreclosure wave similar to what happened in 2008, I don't believe that's going to happen. I don't think that with all these government programs and all these things that are going on right now, I think a lot of folks are going to be able to avoid that. Now, the question is, how long is this going to go on? Again, I take it back a little bit to politics. We have a congressional midterm coming in 2022, and then we have probably a nasty presidential election in 2024, as we saw in the last one. Will this government allow foreclosures to start up anytime between now and 2024? I'll let you decide that. I'm not gonna make predictions on that, but I think you all know where that's gonna go. So there's gonna be a lot of folks who might be in this limbo for a very long time. So that's, it's unfortunate. It does keep people in their homes, but it doesn't really help you with your investment, because remember, every month that you don't pay your home is money that's going basically disappearing. Your equity disappears every single month that you're in forbearance. So if you're able to get out of forbearance and make your home payment, you should do that. If you cannot make the forbearance, well then you basically get a place to live without having to pay for a while. So I don't believe that's a bad thing, but it is the reality of what we're dealing with. So that's it for now. Again, my name is Diego Mendez. I'm a loan modification, foreclosure, and bankruptcy lawyer here in Miami, Florida. Like I said, I was around in 2008, and I've seen a lot of this stuff from before, and a lot of the same things are happening, but it's a different twist nowadays. Things are kind of warped. And who knew that the federal government has so much power to turn foreclosures on and off? I didn't know that, but now we do. So we are moving into a totally different time and a totally different vibe as to what will happen with foreclosures into 2022, 23, and beyond. Please watch and subscribe to my channel, Debt Law, a survival guide for the desperate debtor. I'll keep focusing on these type of issues because I know a lot of people are interested in this right now, and we'll keep talking about this. I'll try to answer all your comments. Place comments in the comment box, subscribe. I like all that, and like my videos, obviously, if you do like them. And keep watching, because I'm going to keep talking about this and other things as we move on past COVID into our next era of post-COVID financial uncertainty. I don't know. Thank you very much.